So if you can see clearly, price had a retracement down to this demand zone before the final push to the upside. So it's just applicable everywhere. Then about the trade management. Now, some of you have, um, let's say you get into a trade here. This is a trade. Okay. So this is your entry from here to this point. And now you want to TP somewhere here. Let's be realistic. This is our most recent high. So you want to TP somewhere here. So now if you're getting into a trade from this point to this point, this is about 30 pips. Now let's scale down to 1 minute. Right, guys, see what I did there? I also did a counter trading here, just from this point to this point, because I know there was a demand zone here, so we'll look for buy opportunities around here. Now, if you can look at this particular trade here, it was a 1.7 pip SL to just take about 10 pip, just urgent 10 pip. So if you're using a standard lot, you'll be risking $10.7 to just make $100 sharp before the final buy push. Now, if you can look at this zone here now, we got into this trade somewhere here from this point for a buy. Now, let's say you have you are in profit, so price have moved from this point to this level here, to this particular level. You shouldn't keep your SL here again. Okay, you shouldn't keep your SL here, because from the first entry you made a push from here to this, from this point to this point. Now you need to secure some profit. Like what I do personally is this: once price breaks the major high, like now the 1 minute time frame, now these are higher high, higher low, and price broke this high and pushed up. Price going to this level now, I will just put my SL somewhere here around this zone here. Now, meaning I'll be securing, let me see. Now 4.7 pips at this zone here now. So I'll be securing this point here. So it means that anything that happens in this market, I'm not losing any trade, I'm not losing any money. In less than 4 minutes, I've secured my capital. Now the next thing you do again, you now scale down, you wait a high, pushed up, we had a retracement. Now I obviously know that there's every tendency that price will push back to this demand zone. There's a demand zone, the last second before the buy candle that breaks the structure. Now I obviously know that there will be a push to this downside. So I will not put my SL here. If I should put my SL here, then I will, like, price will just tap my SL and move out. So what I need to do is I will still maintain this zone, securing just 4.7 p, that is securing just like $40 using a standard lot, and wait. Now price went up, had a rejection here, pull back, another rejection, pull back, then the final push to the upside. Immediately price should break this zone, this particular zone here to the upside there. You move your SL again from this zone. You move your SL down to this point here, to this point. Now your SL from this point, now let's see. Now obviously you have secured 13.2 pip, 2 pips, 2 pips, 13.2 pips for yourself from this zone. So you put your SL here now. Now you now wait again. This is just like what you call trailing of stop loss rather. So now you now wait again. Price pushed up, move to the upside again. The next thing you need to do is this. You move your SL again from this point down to this level. Down to push up again. Now let's see how many pips we have secured for ourselves in this particular trade. From this point to this point now, we have successfully secured 34 pips. So if you're using a standard lot now, you have made over $340 for yourself. So now you are running this trade at like you are just running it like you are not risking anything, and you are in profit, you are making money. So now we now had a push again to the upside. Now price successfully broke this structure here, this zone here, this zone. I will now move my SL again to this place. Now we had a demand zone here. There's a demand zone on the 1 minute time frame. I'll now move it down to this place. So now price, now I've secured how many pips for myself? 41 pip. That's $400 for myself. So anything that wants to happen in the market can just happen. It's none of my business. Now look at what happened here. Price now went up, took me out at this level, which I've secured 40 something pips for myself. And then we had a break of structure to the downside. A break of structure to the downside. That is change of character from the 1 minute time frame. So we had a change of character. So let me show you guys. So we had something like this. One. So we had this break, the break of this low on the 1 minute time frame. Now we had the break of this low to the upside here. And now there's a supply zone here, but I did not actually see it on time. So I have to be realistic to myself. So we had a push here, but there was nothing to mitigate. So we had a push here again. Now this particular push to the downside broke this low, this internal structure here. There's this internal structure here around here. There's an internal structure. So we had the last sell candle, the last buy candle before the sell candle that broke this structure. So I had to put my entry around here, and then boom, price touched this zone and flip to this side. So here now we are risking just 3.2 pip SL to achieve 19.5 pip SL. Now, if you notice from this trade management and what I just did here now, we actually secured 41, let's just say 40 pips for ourselves. And then I was out of the 40 pips, I was risking just 3.2 out of 40 pips, meaning that even if I should lose this particular trade, I'm actually risking it on what I've made today from the market, not that much. So I'm 40 minus 3 is about 37. So I have 37 left for me now. Fortunately enough for me, this trade actually went to my direction. So I actually secured additional 19 pips to myself, meaning 50.
Finally.
Who is that? So I actually secured 19 pips plus for myself, additional to that 40 pips, which is about 59 pips totally for myself. You understand? Now, if assuming this trade should go bad, obviously I just secured 37 pips for myself at the end of the day. And if I'm using a standard lot, I've secured at least $370 for myself. And now achieving this, I've made something tangible again for myself, additional 59 pips at the end of the day. Now, one of the things that will make you guys to be actually successful, or how will I even say, not really successful, but at least you'll not be missing trades and you'll be following trades every day. Like me, what I do personally is that if I'm trading EU today, that is what I'll focus on. I won't start jumping EU, GU, AUD, USD, blah, 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 and all that. Look at my GU now. I had zones. Look at it. You can see all my past events. I have zones. Now, look at. Let me see if. Let me go to the 1 hour. I think on this chart, I've not really traded GU. Yeah, on this chart, I've not really traded GU. So it's just actually new. But basically, it was just EU. I did more of EU on this chart. So if I'm trading for the day, I just look for a particular asset. Let's say EU. I want to trade EU. I'll just be watching. I'll just be looking out for EU. Now, if you can see how EU respected all our zones from the one hour perspective, our highs and our lows, obviously like this. So now, like I said, the last time I said something about wicks. Once you see wicks like this, there are informations here in wicks. It means that buyers and sellers they were in a fight, in a battle. So there are informations here that you shouldn't just take for granted. So if you see something like this, if you go to the 15 minutes time frame, you see a block waiting on the 15 minutes time frame, you're still seeing a wick. If you go to the 5 minutes, definitely you should see a wick. Okay, can you see we have the last sell candle before the buy candle that breaks this structure? On the 3 minutes perspective, it should be clear. Now the 3 minutes step is not that clear. Let me go to 1 minute. Let's see. See, on the 1 minute time frame, this is how it is. So now let me this is that for trade management. So you have to know how, like, you need to manage your trade. So if you're in a trade, you're making 100 and something dollars, it's wise for you to even take partial sometimes. Like me, let's say I'm using a 5 standard lot and I'm seeing like 2k like floating on my screen. Almost, I'll just take 2.5, meaning I've secured $1,000 for myself. Then I'll still move my SL. Let me give you a chart example. Let's say from here to this point, I'm making $2,000. What I'll do is I'll take partials using 5 standard lot. I'll take partials. That is, I'll close the trade on 2.5, meaning I'll take $1,000 as profit, add it to my additional balance. Then I'll move my SL from here to this point here, at least securing nothing less than 500 USD for myself. Then, meaning that I'm actually allowing $500 to do whatever it wants to do. So if the trade should go bad against me, I'm actually risking 500. I've made 1.5. If the trade should go to my direction, I'm actually making more. I keep taking partials and all that, because anything can happen in the financial market. No matter how you think you're an expert, or more things will occur there. So it's not something you start doing, you will pride that I must achieve 100 pips, 200 pips, 3,000 pips. No, that's not. See, the most important thing is for you to make money at the end of the day, not trying to prove anybody right or wrong that you're actually doing that and all that. So you manage your trades very well. So let's say at the end of the day, you have made like $300. You have a daily target. You have made $300. It's wise for you to just, okay, fine. Let me see if I can reach, let's say, okay, out of $300, it's okay. It's fair enough for me to reach $50. Let me see if I can get additional trade. Let's just say the first trade for the day, you made $300 and you want to make more. So let's just say you reach $50 and you actually lost the trade. You actually lose your $50. It's wise enough for you to just close for the day with $250. Then tomorrow again, you calm down at night, you do your analysis and wait for price action to play out. You take your trade. Not because you're making $300. You say, oh, I'm not satisfied, I want to make more, because maybe Boss Frank is posting his own profit, or Wealth is posting his own, or Dr. K is also posting his own. You too, you want to do your own. One thing I've noticed in the group is that most of you always want to be trading all every time. You just be opening different assets. You just be opening. Instead of you to be trading and putting all those money at risk, it's better you should be backtesting, learning. As you're learning, you take 1 or 2 trades for the day. You learn, you take 1 or 2 trades for the day. Not something you keep trading every day and every day and every day. Sometimes you'll be okay now. Something like this now. Me, I'm not seeing any setup here. I'm actually seeing setup, but I'm not trading. See something like that. There's a supply zone here. Price mitigated this zone. On the 1 hour, on the 1 minute time frame, there's a break of structure here with an imbalance. Now price is resting somewhere here on another supply zone here. There's a supply zone here. Now, if I should go to the second time frame, I don't know what happened to my trading view, so I'm having issues with that. If I should go to the second time frame, I'll be waiting for something like this. Something like this before I'll get into the trade. So my entry will be somewhere here on the second time frame. So I will now look for entry somewhere here like this. Now I'll be looking for something like this. You see, these are I used to get my 1.2 pip SL. I'll now wait for something like this, another break of structure again on a smaller time frame. The smaller time frame. It might look simple, but then you need to understand internal structures very well, macro and micro structures very well. So I'll be looking for something like this. Then my target will just be like 10 pips. And what will I do? I'll just use 5 standard lot and reach $50. That is $50.2. Just 5 standard lot and just collect urgent 500 USD and I'm out of the market. This thing will just happen in less than 3 minutes. You're out of the market. Urgent scalping. But if you look at it now, on the bigger time frame, 5 minutes. Look at how it is now. Can you see? But I saw this thing on the 1 minute time frame. You go to 15 minutes. You see that on 15 minutes, it's not even clear. Can you see? It's not clear on the 15 minutes, not that clear. It's kind of risky, but if you understand lower time frame very well, you just pick this thing up. You just pick this thing up like that. Just sharply you have gotten. So something like this now, if I'm in this trade now, once trade gets to this point somewhere here, 4 pip, my SL will be here. So let's say trade is around here, 4 pip. My SL will be here. I'll put my SL on break even. So even if trade should just come like this, the trade should just come back like this, down to this point before going like this, or decide to break it off. I'm not losing anything. I might just leave the market with some cent or $4 or thereabout. I'm out of the market, so I have nothing to lose. So the most important thing is capital preservation is the most important. I think that should be part of the stuff we should write in the group. Oh, capital preservation. You see, like I saw some. I think if you're in that group and with the risk management stuff we have been preaching, I think it's something that it should be difficult for you to blow off your account. It should be very difficult for you to blow off your account because you just need to follow up all the whole rules. You shouldn't just be giving up like you. Sometimes I see some of you will be doing something different. Something different. Like someone will be saying, okay, fine, trade it this way, do it this way, do it this way. Some of you just get into the market and start doing whatever you like. So that is it. I don't know if you guys have any questions. You can ask your questions.
I have, I have. Good evening, sir.
All right, go on.
Please, when you've drawn your zone and price came to your zone and mitigated that area, what other confirmation are you going to be watching for before you enter that trade in your zone? In your zone,
Like, let's say for instance, now this is your zone. I wish this trading view now. My stuff is, I don't know what happened to it. I don't even know. I'm coming. I'm coming. Let me see if it will work. Just hold on a bit. Oh, it's not working. No. Let me just. Oh, worry. Let me just stick to this. Okay. So let's do this way now. From your 15 minutes. Okay. Let's say from your 15 minutes, this is your entry. This is your POI. You understand? Can you hear me?
yes, yes, I can.
Yeah. So from your 15 minutes, this is your POI. Now we have different types of entries. We have the risk entry, the confirmatory entry, and the exception entry. The risk entry is something like this. So once price, okay, let me put it this way. So let's say this is your demand zone here. So what will you do? You just come and put your entry here. Right, for the risk entry. You're looking for long position and buy opportunity. So your entry will be here. Next high. Your SL will be just slightly below your demand zone. Okay. So if you're expecting price to just come here, to this point and push up. That is for risk trade. You just set your pending order. Then for confirmatory entry, let me show you a perfect example of confirmatory entry. Let's just stop. And this is a perfect example of confirmatory entry. Now, we had a break from this side. The price was actually ranging, consolidating, and pushed to this side. And price tapped in this zone. These are demand zones. Price tapped in this zone. I refuse to enter this trade somewhere here. Because anything can happen. Price can just decide to just break this zone and your SL is taken off. So what did I do? On the 15 minutes time frame, I allowed price to tap in my 15 minutes demand zone. Then I went straight to 1 minute. Let me see if I so price touching into our 15 minutes. These are 15 minutes POI. Let me write it out. So let's see. M15. So these are 15 minutes POI. You understand? So price tapped in here. So now I now wait for break of structure again for price to break the most recent high. That is the high that pushed price into this zone. Let me see 3 minutes. Now price tapped into this place now. So we're having what? We're having our lower high, lower low, lower high, lower low. Yeah. So price tapped in here. I refuse to enter. So now I'm expecting price to break this high, this particular high here. So now price gave us an internal structure again. Internal one, our high and our low. Then a break of this internal high. Can you see this internal high here? A break of this high. So price went up like this. Now, immediately price did this stuff. Yeah. What did I do? I now looked for the last sell candle before the buy candle breaks the structure. But this particular one now, price refused to return to this zone. But I told you guys about weak information. I told you guys about weak. Now there's a weak here. There's a weak around here. So what did I do? I just select this zone, this particular week, the open of this week down to this point. If you can look at it now, we're having 2.1 pip SL. My risk to reward is 1 is to 18, 2.1 pip SL. So this is the confirmatory entry now. Price tapped in, pushed again. So I wait for price to break this low, this high. Price broke this high, but there's a week here, there's an information here. So now I decided to like choose this recent high. I can actually draw this zone to this particular zone here. I can actually draw this one here. But I waited for price to break this high. Now price broke this high and returned back to this week. This week exactly. So you can see. So it's not magic. Look at price return to this place before the final push. And see. So what happened? Now my target was 37.8 p profit. That is take profit from this point to this point. Yeah. Can you guys see? Now let me delete this stuff. Now now we had price move to this point now. This is something now. Let me explain something critically now. Now after price tapped in this zone, it gave us 37 pip as our take profit. We achieved this. And I decided to say, okay, maybe price broke this high. Oh, maybe price will now continue the buy. So I lost, that is 3.7 pip, 3.7 pip SL. So now 30 minus 3 point something, at least I'm still managing 28. You understand? Now, I was still having another demand zone here, this demand zone, because this particular demand zone broke this high, this particular high here. So we had an impulsive move down to this side. So price did this, returned back to this point again. Now let me show you guys something. The power of you concentrating on one particular pair trading. Now, price pushed up after giving me this, and I had minus 3.7 pip SL here. So price pushed down to this point, back to this exact point again. This is how many pip? Let me see. And this is 5.6 pip. Now I had to risk it because it was worth it, because my target was actually 69 pip target. So now look at what happened. So price tapped in here and start moving. Now this is what, let me explain order flow for you guys. Now look at what happened. Price gave us, tapped in here, now we're in profit. So naturally, me, as immediately price broke this high down to this point here, my SL is somewhere here already. I've secured something for myself. Naturally, I know this is how I'm playing. So I secured something for myself. Then we had a push to the upside again, down to this side again. So what will I do again? And I look for another entry around this zone, So within the trade though, this thing is like I'm still holding this particular trade, but within the trade now, I had a re-entry somewhere here. Leveraging on the profit I'm having here and the profit I'm having here. So now I've taken profit from here. I'm in a trade now. I'm in a trade from this point to this point is like 15 pip. So now I'm actually, let me say I'm actually making $130. So now I had another trade. So I'm risking just 2.6 pips. So I'm actually risking $20 out of 100 and something dollars profit I'm making from this particular trade. Now, this is the gist now. Within this trade here now, I now took another trade again, a re-entry for myself, and I collected 18 pip, meaning I've collected urgent $180, still allowing this trade to run within this thing here with what are they called, order flow method. Now allowing this trade to run from this point, and also another re-entry here now. Let me see how many people SL is this. So this one is 3 point something. Now out of this 18 now, I lost this part. Okay, this part, okay, no, I did not lose this trade because the trade tapped me into this zone. And definitely I should be on break even from this point to this point. So this is like 11 pips. So I should be on break even somewhere here. So let's just say I achieved 5 pip profit. So I added it to this 18. Now I left the market. Now market reversed to break out. Now I had another re-entry again from this point at this level. This one now is like 3.8. Now, because our official target is this zone, this 69 pip SL, I mean 69 pip take profit. Now, I'm actually looking for I'm leveraging on the profit I've made from this zone, profit I've made from here, and profit I've made from here. Now I'm now leveraging on what I've made from this point. Because this point now I made like, let's say 11 pip. Let me put it here. So let's say I've made like 10 pip from here. So now I'm now risking the urgent $100 from this particular position, because here I've collected 180. Here now I'm making like, I'm saying around 100 and something. I've collected 180. Now I'm actually leveraging, and okay, I collected 10 here, 180 here. Now I'm now leveraging on this 10 here for this particular position. Now this re-entry here, I'm now risking just $30 from this point. Now I achieved again $210 from this particular position, still holding this particular position again, all on one particular trade. Now look at the results. Price went up, took profits, pulled back, and finally hit our zone, giving us total of 72.2 pip, 2 pips as our target. On this particular trade now, you can even make you can even make more than 5k if you understand order flow very well. You can make more than 5k from this particular trade. And look at what happened. After taking profit here, and this is the power of concentrating on one thing now. I missed this zone. I couldn't trade this zone, so I was not feeling fine. I'm not still feeling fine. So I'm trying to take my eyes off the chart. But then price started selling down,
Okay,
selling down,
so
selling down. Yeah, so selling down until I saw this particular trade again. Can you see this 1 pip SL to take 16.4 take profits? That is as my target. So I was just risking, even if I'm using 5 standard lot, I'm only risking $50 on this particular trade. Now just look at how price sniped. Can you see? No drawdown. If you go on the 1 minute time frame, you see it so clear. Let me see. I don't know if this on the 1 minute time frame is so clear. Just 1 pip SL, and that is it. Urgent. If you're using uh, if you're using 5 standard lot, you should be making nothing less than $700, $800 on this particular trade, like this. So all these things should happen in less than how many minutes? Let me see. All this happen in less than 9 minutes. Can you see? In 9 minutes, you have made over someone's salary. Some people their 1 year salary. All this is just if you understand internal structures, other flows, and all that. Now look at now. I saw another trade again here, 1.7, 1.7, and I collected urgent. I mean, what did I take here? Sir? This is like 7p before price went against me. Just sharp stuff. Now look at now I drew this zone. Price failed to return to this zone. One. Second leg, look at this zone. Then I drew this zone again. Price took me off. Let me see. So I made like 7 point something people SF. So naturally my SF would have been here. So let's just say like 3.1 p before price went against me. I think I was having a pending order here. So price took my can you see 1.7? So price took me out. Price wounded me self. So I lost like 20.14 dollars. It wasn't that much compared to what I was aiming at. Now immediately now price changed trend, like you see. So I had no pending trades around there. I did not trade all these zones till it gets to this level. Now can you see? Can you see this one is 1.7? Just collected this one sharp to this point here. 10 pip before price started moving again. Can you see? Now look at this one. And this one gave me 3.2. And what was the target? 19 pip. That is fair enough. You can see now if you look at the order flow from here, you just be seeing clear trends. Clear trend. Lower high, lower low. And price mitigated this zone. Boom. Now remember, this is your original demand zone. This is just like a counter trend rather within your 1 hour structure. So you just take advantage of this thing and make money from here before price pushed up. So you see, that's the price I give you higher low. Now looking at this now, obviously look at your demand zone. Price failed to tap into your zone from the 3 minutes perspective because we're having something like this with an impulsive move. So we're expecting price to just tap in here before pushing out. But then it wasn't like that. So we left it. And look at where we are now. I see obviously price tapped in here. But actually I did not take any of this trade. As I said, I'm not that strong, so I haven't really done anything for myself. So look how it is now. Now look at what is happening currently now. Is someone good thing about confirmatory? Can you see what price is doing? Price is dancing around here. So for me, I'll be waiting to see something like this. Either break here, pull back, that is pull back to the upside, or something like this. Now, any of them, you just wait for price to reveal itself. You don't force it. You just wait for it to happen. That is just my point. So I don't know if I made myself clear. So this is how you should just manage your trades and all. Don't over trade. You can just stick to one pair and just be watching all the moves that is happening. Just be taking small. At the end of the day, you might even end up achieving like 100 pips safe, sharp, and you're out of the market. You rest. So I don't know. I'm done. No. If there's more questions, you can ask.
I have a question, sir.
All right.
So I trade gold majorly. Now maybe about magnet. And I would like to actually know how I can get 5 pip SL on gold. Because if I use 5 pips SL, most times usually it's
Ah,
going short.
see, how will I even say this thing now? To me, there's no see. Okay, fine. Let me show you something. I don't know how you guys are seeing this gold. It's just everything boils down to how you understand your chart. If you like trade anything, even though it's bet Nigeria self you are trading, as long as that's candlestick, you know what to do. There's nothing special about gold. It's just that gold is just vomiting pips. That is just it. If not, let me look for. This is my second time for it on gold now. I want to look for one example that I will give to you. So, okay, let me go to 5 minutes. Okay, so let's use this as a case study now. So let's say you have a break here. You can see obviously the downtrend go. Long. Can you see? Sure, you can see. Oh. So you see obviously the downtrend. Yeah, downtrend. So let's assume that this is where price is currently. I want to take our trade. So our supplies over here on the 5 minutes perspective. Let me see how many people SL will be having. This is like 12. Now, if you scale down to 1 minute, let me look for another entry on 1 minute. Let me look for another zone. Break. And see, this is like 7. Though now you need to understand that each of these assets, they are very volatile. You understand? They're very volatile. But then if you want to achieve a smaller PIP SL, then you just have to subscribe to Trading View and you need to understand seconds time frame and 1 minute time frame structures very well. Like when I mean very well, you need to understand them. Let me my Trading View, I don't know what happened to it. But I've shown you a very good idea. Like let me see if I can use them now. Okay, let me see. Let me see. Now, can you see we have three people here now? I think this is a good example here. Now, see something now. This is a high, this is a low. Now, price broke this high, this recent high within here, with an imbalance. Now, remember I said there's an information in every week. So obviously there's a last sell candle before the buy candle, which you definitely see it on the second time frame. So now let's put it this way. These are internal break of structure here. Where is your supply zone? Where is your demand zone? This week information. These are your supply. Where is your
Oh,
entry? Long position.
oh.
How many people is it? This 3 point, this 30, it means it's 3 people SL.
Exactly, sir.
Mad.
How many people can you see? Your mic is noisy, oh. Your mic.
But really, they para.
No, leave that in away. But now you just see that you just catch history. Sometimes, let me tell you guys one secret. Sometimes the market will give you smaller pips. Sometimes it will give you pips that are quite big. But one thing you need to understand is this: if it's a high probability trade and it will definitely vomit something very nice for you, I think you should take that. Now there are two ways of managing your risks. It's either by your SL or by reducing your lot size. Let me assume that this trade now is a very high probability trade, and I know I will achieve 37 pip SL and 37 pip take profit. And let's say the trade is giving me something like this, 10 pips. Now 10 pips now using one standard lot, I'm risking $100. What will I do? I'll just use 0.5, risking $50 for this trade just to achieve this particular thing. But if you understand internal structures very well, it's like, yeah, you keep it here. So you're having like 2 people SL. Now, if you understand internal structures very well, like you understand internal structures very well, and you're using seconds time frame, almost having 0 point something people on gold, all this thing boils down to how you understand internal structures very well. You can see what I did here now. Like, the thing is just applicable everywhere. Once you see it, once the market presents your setup, you get it. Let me even see somewhere. Let me see something here. Can you see? Oh, can you see this three now? Let me show you. Let me show you something. But some of you will not believe that this is a pullback. I mean, I don't even get strength to argue. Some of you will not believe that this is a pullback. But if you go on 15 seconds time frame, you see them clearly. So now, where are your zones for buy opportunities? This is your zone number one. This is your zone two. I see. Now, what are we having here on gold? How many people from this zone to this zone? Let's put it this way. It's not 3 people SL. 3 people SL. So you're achieving your 3 people SL sharp.
Go my good.
I see. This is the same gold now you're talking about. If it's someone like me now that will go to down to 30 seconds now, I might even have lesser than that because my entry will be somewhere here. Let me shock you now. You know how my entry will be somewhere here because this is just like a hammer. This is a hammer. If you're using all these retail traders, this one on a hammer one that you use. So it's something like this now. Okay, this is it now. Now we are having I'm coming. We are having a break here. This is a major break on the 1 minute. Can you see? Now, this particular push led to the break of this point, we had a pull. We also have a push here, but most times we used to work with the extreme demand. So most likely I will not use here because if you look at my EU, I gave you guys one example that the thing took me out because we have discount and premium zones, sure, but then maybe in next class we'll talk about that. But I would definitely refine my entry down to this point here. If I'm finding my entry down to this point here, so my look at what I'll be achieving. Is this not one pip? This is one pip now. One pip SL on gold, the same gold that is volatile for everybody. So, but then if these things, it boils down to your understanding, like how you understand entries and structures on lower time frame. And you see, I can like still show him more and more and more and more. Like it's just there. Let me see if I can have one. This
Hello,
one,
this
this one
guy.
is not. There's no confirmation here, so let me see. Please, I'm using not three. Let me show you the break. Broke this high. Can you see? Broke this high here. Push back down to this zone for the final push. Now let's go to this one. I told you guys this is a hammer. So there's a wick here. There's an information here. You mark out your wick. You mark it
Okay.
out. Position.
Then
How many people is that?
8.
It's not 8 oh, that is 2 people. When you see 28 on gold, it means you take the first digit.
Okay, it's 2, not 2.8.
Yeah, that is 2 now. That is 2 people SL. That is 2.8. Yeah, so you're still risking the same thing. So there's nothing special about gold. It's overrated. Just that it only permits pips just in a short period of time. This is just like 40 pips. You understand? Let me see how many minutes is this. 35 minutes, you have gotten $400. Sharp, sharp.
This thing dey sweet my body.
So you see? So that is it. Nothing serious.
Thank you, boss. I appreciate.
No person.
Hello, sir. Hello, sir.
Yeah.
Sir, please,
Yeah, what's up?
I would like to know the market structure that we are interested in. Okay, can you show us the market structure, like if we have changed direction, because we are in uptrend before, but recently, since I think this is a broke structure to the downward, so I want you to confirm it for us, please.
Okay. Market structure, change of character. Now
Yes,
let me
sir.
go to 1 hour.
On BTC,
On what?
BTC.
See, let me tell you guys something. There's nothing special about this BTC or any assets. Anything you know on any particular trade, you can apply it anywhere. We're
Okay,
not
they are
doing
all the same.
mathematics here. They're all the same. We're not doing maths here that you need to do all the way example. Though. It's just the
All
same.
right.
Once you understand this thing, you don't finish. Now let me show you something. Let me see your BTC. Now This is your lower low. This is your lower high, right? Your lower low. Now, lower high, lower low. Now, price broke this most recent lower low on the 1 hour time frame. Do you understand? See, normally you should be expecting something like this. Let's say we're on an uptrend one, something like this. Something like this. You understand? Now, before you confirm that this market is actually a downtrend, like you want to start selling, you need to wait for price to break this most recent low on your 1 hour perspective, your most recent low. So let's say price breaks this low, this particular low here. This is what we call intent. We call it intent. That is intention. Market is showing the intention that, oh, I might sell, I might start selling, or it might be a liquidity grab. Now, there's what I call BOS. Now, break of structure. We have two types of break of structure, or three types. It depends. We have the wick and we have the full body close candle. For me as a person, I work with the full body close candle. That is, I don't just use wick as a break of structure. Wick as a break of structure can be inducement, stop hunt, and all that. So I don't use that. So what I'll do is this. I'll wait for full body close of this low to be broken before now. I will now wait for price to touch my supply zone to push down. Now, this particular thing you'll be waiting for here on the 15-minute time frame is a lot of candles. Now let me use the chart as an illustration. Now, obviously, downtrend. Now, look at what I just showed you. This is our most recent low that broke this structure here. Now, price break this most recent high. This is our most recent high here. So price broke this high here at this point here. That's the reason why we had a push to the upside, to the downside again, to the upside, to the downside again before the move. Do you understand? So what you need to do is that you go to the bigger time frame, which is your 1 hour as a day trader. You now look out for a break of structure to the upside that has broken the last high. So we have something like this. This 1 hour. So now you'll be waiting for price this particular push from here to break this place, this particular thing here, this particular high. Once price breaks this place on the 1 hour perspective, you now wait for pullback to this side. Now, this is where the magic comes in. Now, immediately price breaks this high. This is what we call the break of structure here to the upside. That is change of character, chalk, and all that. Now, you now draw your demand zone. Right there. You now draw your demand zone here. And you wait for price. Wait for price to push up. Can you see? Now, this example I just showed you, now this is what just happened here. Break of this high, pull back. Can you see? Exactly, no difference. So now, if you look at this thing now, let's scale down to the 15 minutes now. Now see the magic. Now look at 15 minutes. See, sorry guys. Take money to go and mark up the buy side. Pulls down to this side. Can you see? Now, price failed to break this high, this particular high here. This particular high failed to break this place. So, change of character is not confirmed yet. You cannot start buying. Even if you start saying buy candle, don't buy. It might just take you out. Now, you need to, since now this particular high now failed to break this zone, you ignore this zone. Now this new zone, this particular high now made a push to the downside here. Now your focus will be on the most recent zone, which is this point here. You want to go buy something? Which is the most recent zone here at this level, this most recent zone here. So now you wait for price to break this zone before you now start looking for buy opportunities like this. Now look at it now. We have a break here. This is a break. So now let me delete this stuff. Let me delete this stuff. So now can you see the break? Now for me, let me show you guys something. For me now, there's no obvious entry here. Don't deceive yourself trying to create something that is not there. There's no obvious entry. So now I'll now look for the most recent high again. This particular high here now made this push to the downside. And we had another push here. With this upside before this one, before here. Now, this is where the magic comes in. Oh. Remember I said something. I said every week there's an information, right? There was a fight between buyers and sellers around this zone that led to this break of structure. This side, to the upside. Yeah. I'll now draw my demand zone on this week. This is BTC. You see? And now I'll have two demand zones now. This is where sometimes it gets confusing. I have two demand zones. Yeah. But if we're being realistic to ourselves, this particular stuff did not break here. This was the push that made this zone to be broken. So this were area of concentration. So what would you do? You just go to your Binance and you fix your entry, long position. Entry at 21,052. You put your TP. You put your TP somewhere here, your SL somewhere here. Not risking much, but let it be that is in line with what you are trading. Let me see show another re-entry again. Now on this particular chart, now this is 15 minutes time frame. Let me go to 1 minute now. Let me show you something. And now when people see this now, they start shouting, this guy na wins. But if you understand all these things, you won't actually struggle with it. Can you see? Let's say after taking profits here now. Now let me show you something on being realistic now. Normally I'll draw my entry somewhere here and I'll lose this trade. I'll lose this trade because price whipped me out. So I'll lose this trade. But now let me show you the shocking thing. After price took me out from this zone, let's have made money here and I lost little percentage here now. We had a break again to the upside. Yeah. Now look at it. Can you see this week here? I said there's always an information. Look at how market makers are respecting what I'm saying. There's a week here. I'll not draw it again. I'll come back here. I'll still buy. Huh?
The weeks that you are marking out, is it the upper week or the lower week? Because you only mark the upper week in this one that I just marked.
It's from the up now. It's from the up. You start from the up now. From the open of this week, ending part of the week. I'm only giving it space for spread and all those stuffs there. You understand? If not, normally I can just keep it here. I can just fix it here. and people will think I'm doing something. Can you see? I can just fix it there, but I really want like to give the market space. Do you understand? So I'm risking
Yes.
like 0.06% of this trade. So imagine the risk to reward. On Binance, you should have achieved nothing less than 100%, more than risking little money. I see. Take my own. Take my own.
It's around that SPV rate, 25, for the first time.
Huh?
Even if you go under 5x on that 0.2%, 2% stop loss is nothing. I have
I'm
to
not
get
hearing
that.
you.
I said that if you're able to get such percent as your stop loss, but even if you use 105x leverage, that it is not much. It's not even, it's very, very small.
Yeah, it's not much.
So, boss, what type of information does that week trying to tell
Eh?
us? Those weeks that you identify to stop. What type of
You
information
should
do
go
you
and
need?
learn hidden supply and demand. These are things
Hidden
that hidden supply and demand. Yeah.
Okay, I'll make notes of that. Thank you.
So that is it, sir. That is just it. Okay.
I love myself the way I.
Hello, boss. Good evening, sir.
Yeah, evening.
Okay, please, I have a question. I want to confirm last sell candle and week. Which one is stronger? Because in the example you showed us in Euro USD, you used the week instead of the last sell candle. When you
Oh
have
no, no,
such tools,
no,
how do you know
no,
the
no,
one
no.
that is strong? Okay,
Don't get me wrong. See,
okay,
market sometimes will present weeks for you. Do you
okay.
understand?
Yes,
Market sometimes will present weeks for you. If market should present weeks, okay, fine. If you're seeing weeks on the 15 minutes time frame or 5 minutes time frame, it means that on 1 minute time frame or 15 seconds time frame, there's a last there's a last sell candle before the buy candle. Do you understand? But I'm just
okay,
telling you that me, I've gotten a lot of experience that once I see week like this, I don't even need to go to lower time frame. I'll just mark it out. If the week is long, I'll use 50% of the week and I'll take my entry. So there's no point of me going to lower time frame to start looking for last buy candle before the sell candle and all that. Those ones are for new babies that are coming up. So, but if you
okay,
have gotten a lot of experience, like once you see week, like if I should see week on the 15 minutes time frame, do you know what I'll do? I'll just select, okay, let me put it this way. This is a week now on the 15 minutes time frame. You
okay.
understand?
Yes,
I'll just take 50% of this week. So my entry will be here. 50% of
okay,
this week. This is where my entry will be. My SL will just be slightly below the week here. Can
okay.
you see? I'm still having 0.41%, not even up to 1%.
Yes,
Do you understand? So
yes,
this
yes.
thing does say that if you see weeks, like you're not seeing the last to sell by candle on a particular time frame, let's say 15 minutes, 1 hour, 30 minutes, and all that, just mark the 50%. If the week is very small, start from the open of the week. If the week is long, start from 50% of the week. But trust me, if you go to a lower time frame, you'll see it. Let me see this BTC itself. I just wish this chart will just show. Is Boss Frank online? If I'm not said this was.
You I'm here, man.
Ah, say your voice na big man voice o. I need to hear am.
I dey
But
learn
Frank
now.
na boss.
I will not talk that thing. My oga still dey learn. Which kind thing be that? Now, can you see? Even on the 1 minute time frame, on the 1 minute time
But
frame,
when
we're still having this kind of candle here. Do you understand?
Yes.
But if
Yes.
you should scale down, if you should scale down to 15 seconds now, you will see the last sell candle before the buy candle that breaks this structure,
Okay.
this internal structure. This is the internal structure. You
Yes.
understand? Now, two
Exactly.
things will happen. Some of us will pick entry here. You understand? It's not your
Yeah.
fault. Eh? Now,
Exactly.
this is
Yeah.
the
Please, that's our potential.
yes. Now, it's not your fault. Even if trade should take you from here, be confident enough to take the next trade here. Do
Okay.
you understand? Even
Okay.
me, it happens to me
Yes.
too. But the most important thing is minimizing your losses and maximizing your profits. At the
All
end of the
right.
day, yeah, you are not doing competition with anybody. You must not be right always, but make money out of it and get that out of the market. That is just the whole
Okay,
thing.
boss. Because I wanted to ask. Sometimes you see both. You see two of them in one time frame. You can see 2 week or 1 week, then one sell candle in one time frame.
If you see it in one time frame, what are you going to do? Divide your risks. Let's say on currency now. Let's say if you're trading currency, first and you wanted to use like one standard lot. First entry use 0.5. Second entry use 0.5. Do you
All
understand?
right.
It's just like dividing your risks. Okay, first entry, okay, fine. I lost the first entry. Then the second one, it will mitigate me and still cover up my losses and I'll make money. The idea is that you
Oh,
want to use one standard lot, but you are seeing two entries and you're confident that you want to take these entries. Why not just divide your lot size, first entry, second entry, and the push?
yes, yes.
So
Okay,
it's
thank you,
applicable.
boss.
No problem. So any more questions? So
Sir, sir,
yeah,
the
I can hear
macro
you.
and micro, the macro and micro structure now. Like, which one should they advise us to be practicing for now? We that are just beginning, because that micro step, if I should
See,
apply that
the truth
micro.
there, the truth there is that you have to learn it. It's not something you avoid it. That's
Okay.
the reason why I said instead of you guys to be trading every day, every day, every day, you trade a little and you learn more. Trade a little and you learn more. It will help you than trading always without learning. Now, understanding micro structure is the bigger time frame, which is 4 hours, 1 hour. No, 1 hour is not even big time frame. It's not a higher time frame. They don't call 1 hour a higher time frame. Some persons shall they call it higher time frame. But then from 4 hours daily and weekly and monthly is the bigger time frame. Then from 1 hour downwards is the smaller time frame. Now, if you understand structures on 4 hours, you should definitely know how to incorporate your 15-minute structure, your 5 minute structure to 1 hour structures. Do you understand? So that is the reason why I've been reading in the group that study market structure, study market structure. If you understand market structure, even if you don't know how to trade very much, once you know how to just draw your supply and demand and you can manage your trade, you'll be making money. But if you don't understand market structure, which is the bedrock of everything we're doing here, you can't trade it. You'll be drawing supply zones, but you'll be drawing supply zones, but the wrong way. Your supply zones will be correct, but you'll be going against the trend. That's just the point. So market structure is everything. You just have to sit down and learn. In YouTube, we have over 10,000 videos on market structure.
All right, sir. Thank you.
No problem, sir. Any more questions? So we can call it a day.
So,
Hello?
Hello, sir.
Yeah, I can hear you.
Well, me, I'm just a new being, oh, but like while I was trading today, like I made a position that I was wrong, which means because I was using lower lot size like 0.01. But is it must someone must wait for candle closure? Like a candle should close its position. Because if a candle close its position, we want to maximize profits here. So we will not be able to put like our like when to place the trade in the candle, because as a candle I place trade, the thing has gone down already. Like I know that okay, this thing will still give me another red. I need another like it's a sell. Then I place the trade, then the thing just spiked up, and when it spiked up, it came down again, but it hit my stop loss.
What is the method of trading?
Psychological and fundamental, also using trend.
And that is the reason you are saying all these things now. But then, if you are even using Trendline now, I mean, if you are using Trendline, let's say you are using Trendline, or I'm using Trendline. Can you see? If you're using Trendline now, strategy states that first touch, second touch, then the third touch, you take the trade. Now, on the third touch, you need to look for a rejection candle. Now, when trade like this is the 15 minutes time frame. Now we have the third touch here, the third one here. You have to wait for the close of the close of 15 minutes candle, meaning you wait for the next 15 minutes for the open of the next candle. Now there's what we call engulfing pattern. The engulfing pattern is like, where is that box? The engulfing pattern, you see a candle like this, and another one will be higher than it, will engulf it, something like this. Something like this. So we'll be having, and drawings are bad though, but then manage it. We'll be having something like this particular candle will engulf it, then before you take your entry. So particularly, or you'll be looking for a rejection candle, like a pin bar, inverted hammer, shooting star, three soldiers, and all that. Now at the first touch, second touch, then the third touch, wait for the next 15 minutes for this sell candle to close, then for this other candle to open. Now you look for a rejection candle. Like someone like me now, I will now put my SL here. My entry will be immediately this candle finish closing, the 15 minutes candle finish closing, and I'm seeing a bullish momentum on this particular candle. My entry will be here, here, then my SL will be just around this point here. So let me use this stuff to indicate it for you. So my entry will be here immediately at the open of the new next 15 minutes candle. Somewhere here like this. Then my stop loss will be here. My stop loss will be here. I will make my stop loss to be a bit big somewhere here. Why? Because they might just do something like this to weak us out. Something like this to just weak us out, take our stop losses and move. So what me I'll do is I'll wait for the close of this candle. Then the next buy candle, the next candle that is forming, I'll just place a buy entry. Or if I don't place a buy entry, this is what I'll do. I will now use buy stop. I'll put buy stop order somewhere here. that immediately the next 15 minutes candle closes somewhere here, I'll put my buy stop candle here, my buy stop order here, and my SL will be here, slightly here, because my entry is here. So I believe that it won't come here. Now, I'll just put a buy stop. Immediately price get to this point, to just start buying, buy continuation, and keep going. But then if you're using internal structures, internal trend line strategy, you can see we're having, no, sorry, we're having one like this, from this point like this too. Now this is where the engulfing comes in. If you go to 1 minute, let's go to 1 minute or 3 minutes. Can you see?
Yes, sir.
No
Yes, sir.
guessing work. Yeah, so no guessing work here now. You see, even if using trend line self, this is our first touch. Price failed to touch this trend line. Now, but it's not every time that you must wait for second touch, third touch, and all that. If you just understand all this candle region of candles, then it's good. It's good for you then. Then price touch this particular zone here, this area. Let me just put it this way. This area here. You understand? This particular candle now engulf this sell candle a little with a wick, just slightly, but it's not that big. You understand? So immediately after the engulfing, this engulfing candle, that is a bullish engulfing candle. In your next entry is just here. Immediately after, in the next 3 minutes, immediately this candle closes. In the next 3 minutes, your entry is here. So you'll be looking for end long positions here from this point to this high here. So your SL will be here. Can you see? Your SL will be here. Even still using trend line strategy self. But once you understand structure, you can use trend line strategy and finish. Like you can use it to just do whatever you want to do. You understand? But you must understand all these chart patterns, candlestick patterns, and all that trend line. On trend line now, we have internal trend line, we have external trend line. Internal trend line is you using all this trend line now inside 1 minute structures to be catching little trades. External trend lines from 1 hour, 4 hours from the bigger perspective. So that is just it.
Thank you, sir. You usually have answered the question.
No problem. You're welcome.